The yearly open stays in focus as sport as Bitcoin bulls hope for a trip to a $50,000 this week. Bitcoin starts a new week and new quarter if it is worth starting the new year. It's just over a $46,000. Hello and welcome back to the Crypto Live. If you haven't already, consider hitting that subscribe button and turning on post notification. In what will seem like some serious deja vu for hodlers, Bitcoin USD is at practically the same level it was on January 1, 2022. Price action has been quiet, too quiet, perhaps in recent days, but behind that declining volatility, there are signs that the market is busy deciding the future directions. From macro to on-chain, there are in fact plenty for cues to keep an eye on in April, amid a backdrop of Bitcoin at least so far retaining its yearly open price as spot. We have to take a look at 5 of these factors as they pertain to Bitcoin price performance over the coming week. There has been much talk of the end of the post-COVID-19 easy money period and the impact it shall have no risk assets such as Bitcoin. As the United States Federal Reserve pledged to reduce its record high balance sheet and keep rising key rates, commentators have sounded the alarm over what could be the shockwave hitting investments into crypto. So far, however, there is a little sign that a fundamental shift is underway, while in Asia this week, it seems like the opposite is true. As highlighted by markets commentators Olga G. Skeptis, Japanese central bank, the Bank of the Japan, BOJ, has in fact added to its balance sheet, but printing even more liquidity. The BOJ already had the largest balance sheets relative to GDP, and that trend is only increasing, now at 136% of the GDP. For Holger, this is not only a surprise, but could be the biggest monetary experiment in history. In comparison, the ECB and the Fed look like amateurs, he argued. If more printing means more good times for risk assets, meanwhile not everyone is even convinced that the long ventured balance sheet reductions will last. Central banks, they claim, will soon have no choice but the restart liquidity injection. There is no government either that resisted the temptations to print money in order to pay its bills and police its citizens. The government will never voluntarily go bankrupt. This is axiomatic. I challenge you to contradict with me evidence. Author has EXE of the derivatives giant BitMEX wrote in a blog post in March. Therefore, if your time horizon is in the years, it's time. If you mess with the bull, you get the horns. Remember, it's not gold or Bitcoin that is increasing in price, it's a decrease in the value of the fiat currency in which they are priced. The contrasting view as signaled by last week's yield curve inversions. Pitch rates hike against the new high risk of the recessions in the US, a combination that should be pressured Bitcoin and the stocks alike. The lack of the volatility is the main talking point among the Bitcoin traders and the analysis as a Monday gets underway. Some classic but brief excitement around the weekly close faded within hours, with weird star filings to take the yearly open away as spot, data from Cointelegraph Markets Pro and Trading View. With that, Bitcoin USD is in exactly the same place as it was 3 months ago, but short-term price signals are already seeing some signing for the continuations higher. Among them is a popular analysis TechDev, who highlighted Bitcoin's first volatility squeeze since January playing out on the 12-hour chart. TechDev used indicators including the Bollinger Bands volatility measures, which is now the seeing Bitcoin USD suffering the middle of the channel with a skew to the upside. As Cointelegraph recently reported, the odds are already on for an attack on the $50,000 mark, which will be the Bitcoin's first this year. April itself, meanwhile, has much to live up to. In and of itself, this month has historically been good for Bitcoins. It's no secret that a lot of Bitcoin has been leaving exchanges this year, but the latest data shows just how the supply squeeze is playing out. According to on-chain analytic firm Glassnode, last month saw exchange outflows unlike many others. Exchanges are down by the equivalent of almost 100,000 Bitcoin. Historically, there have only been 2 sessions in the Bitcoin's lifespan whose outflow surpasses the 100,000 Bitcoin mark, making March among the highest. Aggregate exchange outflows of this magnitude have only been seen in the handfuls of the sessionals throughout history, with most being after the March 2020 liquidity crisis. Glassnode added in Twitter comments alongside in annotated chart. Should investors be recreating the bottom buying behavior after the COVID-19 crash? The implications should be clear but may take a while to play out. In 2022, while Bitcoin USD rebounded after dropping 60% in days, it was not until Q4 that price performance really began to change. Fellow analytics platform CryptoCurrencies, which tracks the balance of the 21 major exchanges, meanwhile shows that overall Bitcoin stocks are now at their lowest since August 1, 2018, at 2.3 million Bitcoin. A meandering downtrend in 2022 gathered pace in March, which saw a total of 77,000 Bitcoin withdrawals to private wallets. An unusual event has occurred when it comes to the Bitcoin's relationship with altcoins. Combined open interest and the volume on altcoin derivatives markets have surpassed that of Bitcoin for the first time in over a year. The move was noticed by crypto analytics platform CoinLies, which openly suggested that the much fabled alt season may only be over. Could mean alt season. Money flows into alts now, founder Gabriel Dodan told Cointelegraph in private comments. Such a perspective comes with the data showing a considerable inflows into altcoins last week, which one commentator argued showed risk appetite among investors increasing. Taking the limelight away from Bitcoin may not be a dampener on performance per se, Dodan added, thanks to the volatility similarly draining away. On the other hand, that makes Bitcoin pretty stable because it is not over a leverages. It's a good floor for Bitcoin, he explained. Hot on the heels of record difficulty for the Bitcoin's network, hash rate hits new all-time highs, in what shows miners' beliefs in the long-term profitability of the participating in the network. The hash rate now is at 123 exahashes per second, according to data resources mining pool states. While only an estimate of the processing power dedicated by miners, the hash rate has never been higher. According to the proponents, will continue to grow regardless of the external attempts to the ruin in Bitcoin. Bitcoin mining is pretty much the most anti-fragile system designed by man. Francis Powlett, CEO of the payment processor Bull Bitcoin, argued in a well-known blog post about Bitcoin hash rate and energy consumptions last year. The topic of Bitcoin versus energy remains highly controversial, with multiple popular figures taking pains to explain what they see as a logical fact, that Bitcoin uses too much. Bitcoin does not waste energy, they contended, but merely converts it into something more useful as the most sound money ever created. The hash rate, regardless of the narrative, continues to grow, underscoring the basic bull's promise for the investing in Bitcoin. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of the crypto life. Each investment and trading move involve risk. You should conduct your own research when making a decision. That's it for today. If you haven't already, consider hitting the subscribe button and turning on post notification so you will never miss any for future fascinating or interesting videos. See you next time.